today's Targets in Focus, where we discuss FX for some of the most traded currencies, I'm joined by Scott Haslem, Chief Economist covering Australasia for UBS. Hi Scott, good to speak to you. All eyes continue to be on the Eurozone in light of Spain's decision to accept a bailout and the suggestion that Italy may be the next country to follow suit. In your opinion, how do these concerns, coupled with the all-important Greek elections, affect the market at the moment?
Well, I think at the moment FX markets are trading in pretty tight ranges ahead of the Greece weekend election, and that's and adding that uncertainty is keeping FX markets pretty unmoved in general terms. I think the key issues for FX markets are obviously around central banks. What is going to happen in Europe? Is Greece who's going to get elected in Greece? Is it pro-austerity or not? And how is negotiations between any anti-austerity party in Greece and the IMF or the Troika going to go? So the uncertainty around the election in Greece, clearly we haven't got enough information around the Spanish bank bailout to be confident that issue has been dealt with adequately. So the market continues to hold concerns around that. And then I think we've got the BOJ meeting this Friday, going into the US FOMC meeting next week. So we're not looking for any further quantitative easing from the Fed. And when we look out over the next 12 months, we're looking for the US economy to do quite well. We look for the Fed to get challenged on its expectation that the cash rate doesn't need to go up until 2014. So we have a structurally positive US dollar view, which we expect to see reflected in the euro heading down towards 1.15, possibly as low as 1.10, and the yen weakening as well.
Your chosen pair, Aussie dollar, has had a bullish session recently as rumours of Federal Reserve easing continue to hit the markets. What are your predictions for the pair in the short and long term?
Well, we look for the Australian dollar to remain below parity over the next couple of months, around the sort of 97 to 99 range, particularly going into the uncertainty around the Greek election on the 17th of June. We think it's likely that we'll see risk remain off, and therefore currencies like the Australian dollar remain under some pressure. Looking over a 3 to 12 month view, we do have the Australian dollar settling in around parity at 1 against the US dollar, and that's a combination of what we anticipate should help the Australian dollar, which is an improving global economy over the second half of the year, but also reduced flows into AAA and lower cash rates from the Reserve Bank of Australia, sort of balancing that improved economic outlook, keeping the Aussie dollar around the 1 mark.
The recovery seen in the euro after Spain accepted the bailout from the EU to recapitalise its banks was short-lived, as investors quickly turned their attention to the Spanish debt-GDP ratio. Euro weakness is especially evident against the pound, with the pair falling to a 10-day low. Do you see this trend continuing?
Well, we generally have the euro pound pretty flat at around 80 over the 1, 3 and 12 month period. Now that obviously implies from where we are today a little bit of a outperformance of the pound versus the euro over the next little while, and that's generally our negative euro, sort of positive US dollar view coming through in those pairs. So we don't have a great degree of divergence between our euro pound outlooks. So we've got a pretty flat at 0.8 on a 3 and 12 month view.
The IMF indicated that the yen was moderately overvalued, causing it to slip. Scott, do you think this will affect the dollar yen in the 1, 3 and 12 month terms?
Well, again, over the next 1 to 3 months, we've got the yen around current levels, possibly strengthening a little bit towards sort of 78, 79 over the next 1 to 3 months. But on a 12 month view, reflecting our positive US dollar, we're expecting the yen to weaken towards 85 on a 12 month view. We don't believe that the FOMC will engage in QE3. We're reasonably upbeat on the US economy relative to the Japanese, and we think US housing is looking a little bit better as well. So we're anticipating the US dollar strengthening against the yen in the same way as the euro. So we have the yen getting weaker towards 85.
Scott, thank you for your predictions. Well, that's all we have time for at the moment, but click back to DukascopyTv to see how the currency markets fare throughout the day. Goodbye.